If you missed my intro a minute or two ago, again, my apologies for the technical difficulties, which were no one's fault but my own. But I was introducing you to the world premiere of this fine show, Polymarket Insiders, where we are trying to give you an edge on all of these tradable outcomes at the global information markets platform, Polymarket, with insights from top traders and analysts and the occasional peek behind the curtain at the inner workings of the Polymarket platform. So among the things you're going to get to do now that we are fully up and running today is get to vote on some upcoming prospective new Polymarket launches. Someone's going to leave this broadcast $50 richer, and it might be you. So for take two, let's get to it. Let's find out. That's so much better. Again, my apologies, folks, and hopefully we have everything ironed out at this point, but appreciate your sticking with us and for tuning in to this world premiere of Polymarket Insiders. I'm your host, Flip Pidot, and I'm just thrilled you could join us for the first installment of this new show, the newest live show on Old Bull TV. And if you're new to the channel, please take a moment to subscribe and follow us on Twitter at Old Bull TV. This is a great time to be launching some Polymarket-specific content. Polymarket, as you may know, just celebrated its 1-year anniversary of its trading launch. It has seen tremendous growth over this first year. I had the pleasure of meeting a bunch of traders and company folks, enthusiasts at their anniversary party in New York City just last week. But for those of you who are not yet enthusiasts and are new to the platform, might be an existing viewer or a trader coming from another prediction market or event futures exchange. But if you're new to Polymarket, you're going to fit right in because it operates very much the same way, but built on the Ethereum blockchain with contracts denominated in the US dollar coin, a stable crypto coin pegged to the US dollar. So it's super simple to use. You just head to polymarket.com. It'll lead you through the account creation process. And once you've got an account, you can buy and sell predictions on everything from politics and pop culture, other current events, to sports, and even the selling prices of notable art auctions. So before we get to all this, a couple of obligatory disclaimers. All content and opinions presented herein, whether by the host or the guests, are for informational purposes only and should not be construed as investment or other advice. Host or the guests may hold or plan to trade in positions in the markets being discussed. And importantly, we make no representation about the legal and or regulatory treatment of Polymarket in whatever jurisdiction you happen to hail from. So be sure to determine the suitability of the platform for you in that regard before you begin trading. And a final bit of housekeeping, we highly recommend that you have Twitter open in another tab while watching the show. And if you don't have a Twitter account, it might be time to sign up for one, because to get the most out of Polymarket Insiders, you're going to want to be able to interact with us on Twitter in real time. That's how you're going to be able to vote on upcoming new Polymarket markets and how you're going to be eligible to win free stuff. And that is what we're going to do. So, in the future, when Polymarket swag is all up and running, we may give away, your hats, water bottles, koozies, and T-shirts, or maybe even Polymarket Insiders branded swag. But for now, since we don't have that yet, we're hoping that you'll make do with some cold hard cash. We're going to be giving away $50 to whoever's able to answer a relatively complex, we think, although I'm sure you're a bright bunch, question. All you have to do is be the first person to properly answer this multi-part question using the hashtag Polymarket Insiders, all one word and plural. You got to use that hashtag Polymarket Insiders or we will not see your answer. You can see an example of it on your screen right now. So among the more hotly traded questions on Polymarket at the moment, as you likely know, are to do with the outcome of the recent New York City Democratic mayoral primary, which, of course, because now they're using ranked choice voting, is still not assured in terms of the outcome. In particular, there is one market on whether the first round leader will also win the primary. And here you can see this market now is trading at a pretty healthy 84 cents. But given that the election, the primary is already nearly a week ago, this is perhaps not as high as folks might have thought it would wind up trading a week out. Of course, Eric Adams leads in that first round with 32% of the first round vote, nearly 10% ahead of Maya Wiley and about 12 percentage points rather ahead of Catherine Garcia, who is actually seen as the most likely potential come from behind winner should that change once all the ranked choice votes are counted and all the absentee ballots are opened. So your question, relatedly, is this. There have been nearly 400 ranked choice votes in various jurisdictions, states, cities, across the country in modern U.S. elections. So your two-part question for a cool $50 is, through 2020, how many of those nearly 400 elections were won by a candidate other than the first round leader? And who was the last candidate to do so? So let's pull up that feed if we can. Maybe we can just keep that on screen so that we see if any of you particularly fleet-fingered tweeters are able to pull this together, whether you simply happen to know it and you're a ranked choice voting enthusiast, as some of our prior guests of the channel have been, or whether you're simply good at real-time research. But again, you're going to want to tweet your answer to this, both the number of times that come from behind winner one and ranked choice vote, let's say since 2000, modern era of U.S. Electoral procedures, and who was the most recent successful candidate to do that, who did not lead in the first round and yet did win their election. While we let you do your research there, I'm going to take this opportunity to bring in today's guest. He is a distinguished and erudite Polymarket trader and analyst by the name of Chris Brunet from Insight Prediction. You might know him on Twitter as Exogeny Carl. I encourage you to follow him there and to subscribe to his Substack, which is Carl Stack, Carl with a K, stack.substack.com. So Chris, not Carl, but Chris, welcome and thank you for joining this premiere episode. How are you?
Yeah, I'm good. It's very exciting to be here. I'm not an expert per se on the New York City mayor race. I do have some opinion, not too many. What I'm here to talk about is inflation, UFC, crypto, and also a little bit of vaccine markets. So I'm going to talk about that later.
Yeah, indeed, and it sort of gives a bit of flavor of the nature of the polymarket markets. Again, those that might have come to this show through the channel's existing programming or from another of the prediction market platforms might not be used to seeing quite the breadth of markets that you can trade on Polymarket. So to be successful or take advantage of all the trading opportunities, it's not enough to be good at handicapping elections and other political events or even just other current events, but you have a hugely broad range from crypto prices to economic events to public health care outcomes and metrics and sporting events and things like that. And Chris is going to help us break down a handful of the most interesting, most hotly debated questions on the platform across a number of those verticals. So while we do that, or as we get into that, I should say, Chris, I'm going to keep an eye on the feed to see if we get any entries on our trivia question. Again, to remind folks, it's how many of the nearly 400 ranked choice vote elections, hint, it's a fairly small number, were won by the come from behind winner, the non-first round leader. And who was the most recent candidate to do so. So we'll be keeping an eye on that. But Chris, while traders try and figure that out, let's jump into the first of those four that you mentioned, because this is actually a market that is really on the move today, just even in the last hour, as you and I were chatting about before getting onto the live stream here. And this is to do with inflation. And we'll see if we can bring this up on screen. There it is. Will inflation be 0.6% or more from May to June? So this is something that is going to be released in a couple of weeks. And I know it's something you've been looking at quite closely and doing some analysis and some writing on. So what's going on today in this market, and how do you handicap the odds here? What do you suggest traders keep an eye on, or should be, if they're thinking about getting into or out of this market?
So the move today has actually been pretty minor, just a few cents either way. The long-term trend, so when the market started, it was at 50 cents. And it's been trending down to 30 cents or 35 or 40 cents. And I think that's, frankly, a mispricing. So I like talking about inflation. That's like my wheelhouse, because in a past life, I was an economist. Maybe I'm still an economist. And I did a really deep dive on inflation. And really what it boils down to here is whether or not inflation is going to be transitory. Okay, so like if you read any article right now or you talk to any expert, the whole debate is inflation transitory or is it not transitory? And the argument for the doves here, the people who think it will be transitory, is basically that they hope it will be transitory. Okay, so I would take the other side of that And I would say just because of the massive fiscal spending that's going on and the huge amount of savings, people have cash in their pockets. Companies know that people have cash in their pockets. Companies have higher costs. Companies are raising their prices. So just in general, it feels like a dam is really about to break. What I found, so the reason why, if you zoom out to 30 days rather than 24 hours, what's been happening over the 30 days is that no has been trending down, or sorry, up. So that means people think inflation is going to come under 0.6. And the reason why they think that is kind of weird, actually. So I've talked to the people betting on this market, actually, and the things that they are latching onto is, one, the price of lumber is falling, and two, the price of used cars is plateauing. I don't think those are compelling reasons at all. First of all, used cars only account for 1% of the CPI basket. So that's like something you see in headlines about inflation this month. It's like, oh, used cars are going up. But that's actually kind of a very tiny fraction of inflation. And same with lumber. Lumber is actually not even in the CPI basket at all. Lumber is in the PPI basket, which is Producer Price Index. And so it's possible that lumber does filter through to CPI after a few months, but the fact that like over the past week, lumber prices have gone down, that's not going to be reflected in consumer prices. So like that's just not in the prices yet, if it will ever get there. So those are what the doves are latching onto. But what I think is much, much more important is how the Fed is talking. Okay, so when we're talking about inflation, it's really more of an art than it is a science, because you kind of have like look at it very holistically and like see what little tidbits the Fed is dropping for you. And so in the past few days, I think the market should have been trending the other direction up, because in the past week or so, the Fed has come out and said, they're going to start raising inflation markets earlier. They're going to start raising the interest rates earlier than planned. So they were going to raise it in 2023, and now they're going to raise interest rates in 2022 because they're worried about inflation. So that's them saying like, oh, we're worried about inflation. But almost more importantly is the fact that, so the president of the Atlanta Federal Reserve Bank, like a couple days ago, they came out and said, oh, we're expecting inflation to be high and persistent for the next 6 months, 6 or 7 or 8 months. Now, 1 or 2 months ago, the party line, this is what everybody was saying was, oh, inflation is going to last for 1 or 2 or 3 months. And now that we've had high inflation for the past 1 or 2 or 3 months, now they're coming out and saying, oh, maybe it will last for 6 or 7 or 8 months. So really that like getting the market ready. They're like dropping these little hints to the market that's saying, hey, like, even if inflation is high, it's fine. Like we know it's going to be high, but that's kind of new. Like they're just letting us in on that for the first time. So really what I think this market should be more priced at like 50-50 rather than 35 or 40. And the reason why is outlined in my blog post. Like it would take me like 10 or 15 or 20 minutes to talk about all the reasons why I think inflation is going to be high this month. So I would urge you just to subscribe to my Substack and read my blog post if you really care that much. The last thing I would say is I built a Twitter poll around this for my Twitter followers to answer what they think inflation is going to be. And they built the bell curve right around 0.6. So half of them think it's going to be above 0.6, half of them think it's going to be below 0.6. And I think that's more or less what I'm forecasting to. I think there's a 50-50 chance it's going to be over or under 0.6.
Well, thanks for that. And that makes a lot of sense. And I think the viewers are finding what you're saying compelling too. Interestingly, if you refresh the page, you'll see that the no price here dropped while you were speaking from 66 down to 52. So obviously a little bit of volatility in this market doesn't necessarily mean that that price jump or dive is going to hold. But obviously, you make some points that are pretty well taken by me, and I think by our viewers. In particular, you mentioned how the Fed tea leaves are sort of suggesting they might be seeing inflation being less transitory than some are hoping. You said the counter argument seems to be more based out here on hope than real analytics, and the fact that some of these wholesale prices, even if they've plateaued or started to level off, that's not going to be imputed in the consumer data, certainly for the July release, which is looking back at May to June pricing, which of course June is over in 36 hours, so it doesn't leave a lot of time for that to trickle through. And one final bit of kind of numerical context for folks to keep in mind here: the last 3 months, I believe, Chris, correct me if I'm wrong, but went 0.6, 0.8, 0.6. So that, again, rounded to the nearest tenth of a percentage point, the month over month inflation would need to tick down at least one whole tenth of a percentage point to 0.5 for the no to pay out here. So I guess the sort of simplistic read is, okay, it hit 6, it hit 8, then it came back down to 6, so it's coming back down. But that's reading a lot of directionality into that one month number, and you've got to assume that it continues back down below the lowest that it's been in the last 3 months, and not that the sort of more systematic inflationary pressures of this sort of COVID recovery super stimulus period you have to believe that they're not going to continue to feed into this, relative hyperinflation, not hyperinflation, but elevated inflation versus what we've seen historically. So I tend to be sympathetic to your argument here, and I guess it depends, of course, on where you can get into this trade, but it sounds as though you were suggesting, at least a few minutes ago, you would short the no or go long the yes here at basically 2-to-1 pricing, that you think there's much closer to 50-50 fairly valued. But I'll give you a slightly harder question then to respond to, assuming that now we've got this roughly 50-50 pricing in light of your argument. Gun to your head, if you had to get in one side or the other, which do you think is the odds-on favorite? This stays at 0.6 or above, or slightly more likely to dip below?
As I said below, I hate to make this because I really think it's 50-50 either way. But just because long term, so month to month, forecasting inflation is kind of a crapshoot. But long term, like what I talk about in my blog post is the fundamental factors why it's going to be higher a year from now, right? So just because, just long term, I think I'm very hawkish. But also, if the Fed is saying it's 0.6, it's probably like, it could be double that, really. Like they can really say whatever number they want. Sure. And a lot of people online just colloquially don't trust what the Fed numbers are. Like you'll see all these people saying, oh, my cost of living has gone up by 20%. And so there's not a lot of people buying that it's just like hovering around 3%. For many people, they think it's higher, and I think it is higher too.
Okay, before we get to your next market, Chris, I wanted to circle back, if we could, Zach, to the hashtag feed, Polymarket Insiders, folks guessing, and the trivia question. I have to announce we do actually have a correct answer here. It's that one from Orb, House of 218. 15 non-first place in first round of one. Last winner that wasn't first place round wasn't first place in first round is Myrna Melgar in 2020 San Francisco election. So congratulations to Orb. If you would be so kind as to DM us, our DMs are open, and we will coordinate Venmo or however else you like to be paid, and we'll get you that $50. Congratulations, and thanks for playing. Chris, let's get back to your next market. We're moving away slightly, or I was going to say away from economics, at least from traditional economics, and into the world of cryptocurrency. And this is a market tied to the price of Chainlink, whether it is above $27 on July 1st. So tell us about this market and about this coin.
There's actually two Chainlink markets. The Chainlink market I wanted to talk about was what the price of Chainlink market will be on July 15th. Because this one right now, it's pretty much locked. So if you control F, just the word link, it's on that page. But anyways, the thing here is that in this Chainlink market that ends on July 15th, the liquidity right now is pretty low, like in terms of crypto markets. Like there's only $10,000 liquidity, I believe, which means it's not worth the time for like the real like whales and experts to be in the market. So I'm under the impression that the market is mispriced just because the money in the market isn't as smart as it usually would be. Like for example, the Dogecoin market last month, I believe, had liquidity of $1 million or something like that. So people, all the real like sharks, they were betting 10,000, 20,000, 100,000, but they don't have the opportunity this time, so they don't really care. The reason why I think Chainlink is going up in the next 3 weeks. So the time frame for this is 3 weeks from now. And so fundamentally, Chainlink is one of the cryptos that people actually, or people, corporations, everyone actually is going to be using over the next couple of years. And if you read any of the actual experts who talk about it and talk about their price forecasts for a year or two from now, they always say, "Oh, Chainlink is going to hit $100," and I really think that's that's a good price target. It's going to hit $100 sometime in the next year or two. And right now, it's been hovering around $20, $18, $19 for the past couple of weeks. But before that, if you zoom out to a 3-month chart, it's like it's way down from its peak just because all of crypto is down, right? So I guess in some sense, it just really feels like a bottom right now. Like I'm calling a bottom basically because all the people who are really into Chainlink, this is like they're buying it up right now. This is like they see it cheap because they're in it for the long haul, right? So now it's cheap, they're buying it up, and I think over the next 3 weeks, it's going to shoot up by a couple dollars. It's just a matter of when. I believe. Well, you can't read too much into day-to-day prices, but it's up 10% today, and that's usually what happens, like on a Monday, right? Yeah,
this is interesting.
I'm just
I can
bullish on.
Just jump in there real quick to say, I'm watching the live price here, and it's sort of just under 19. So it sounds like the market broadly is seeing a similar thesis to what you're describing here, that it's likely to tick up a couple of bucks in the next. So it's July 15th, so it's 2.5 weeks to expiration. So if it's 1885 now, 2082 would suggest likely to go up a couple of dollars, and it has, as you said, suffered at the hands of sort of the broad cryptocurrency sell-off. What I guess would be a price at which you would find this to be, not attractive on the buy side? You mentioned that it's come down in the last couple of months. I think it was over 50 maybe 6 weeks ago. So it obviously does have a lot of room back to its recent ceiling. But the other market that I had mentioned earlier on, there's a binary one on whether it'll get back to $27, which would be a fairly big move even from here. It'd be a 50% rise. Is something like that off the table? Do you see it more kind of drifting back up, or is there a possibility, given the enthusiasm of the community, the Chainlink community, that you said are just continuing to buy it up? Is there a possibility that this kind of escapes the fate of all the other altcoins and sort of says, this is a special case. This deserves to be much closer to where it was a few weeks ago? In other words, is there a chance of significant upside variance from this $20 to $21, $22 target that you might otherwise have?
Yeah, well, maybe overly optimistic to say this, but I really think I don't see it's gonna jump up a couple bucks. I think when it does jump up, it's gonna jump up $5, $6, $7, $8, and it's just a matter of whether or not it can happen in the next couple of weeks. Like it's going back to $30 or $40. Like it's just a matter of if, or it's just a matter of when that happens. So like, here's another way to look at this market. I don't see a lot of downside. So right now it's at a 3-month low. And if you read the blogs about technical indicators, although I don't really put too much stock into technical analysis, the technical analysts, they all are like going crazy because they believe all the technical indicators, whatever those may be, those are indicating that it's like there's strong resistance at the price level it's at now. It's not going to drop big time. If anything, it's just going to stay there. And worst case, you're not going to lose money.
Okay, great. So I'm just refreshing here to get the latest price. See if this one was also moving as you're offering your opinion here, and it's gone up a bit more. It's now at 21, but it sounds like this one has quite a bit more room. So this one at least did not wipe out all of the upside that you're seeing. So it sounds like if you're buying Chris's thesis here, viewers, you still have a lot of room to get into this one around 21. Doesn't sound like it's guaranteed to happen. Again, Chris mentioned the key risk here is just when it happens, but that there's a lot of upside potential for this to correct back to the upside in a fairly sharp way, just a matter of whether it happens. And again, you've got about 17 days. So obviously in the world of crypto, that's kind of an eternity. So that's probably a good, decent runway to hang on to this. Let us shift gears once again. And here, I think, Chris, you're going to be bringing in a bit of a pinch analyst, a ringer, to talk to us about the UFC main event scheduled for July 10th. Last I had seen, this was trading, I believe, at roughly even odds on Polymarket. But Chris, go ahead and introduce your assistant analyst there and tell us what traders should be looking at with regards to this UFC market.
Yeah, so right now they're at 50-50, which is what it is on the bookie gambling sports websites. But we really think there's alpha here, and I'll tell you why. I'm going to introduce my girlfriend, who happens to be a UFC expert, basically. And she's actually a little bit shy to go on camera. So what I'm going to do is I'm going to put on a filter, and she's going to talk to you through a filter.
Oh, that's fantastic.
There we go.
Hi.
Hello, welcome to the show. Thanks for joining us.
Thank you.
So tell us what makes you an expert about UFC.
So I've been following the sport since 2015. I watch every single card. I follow all the MMA podcasts. I'm on the MMA subreddit. I am truly a diehard fan.
And so the market's at 50-50 right now. Why do you think that's mispriced?
So I think Dustin should be the clear favorite. Connor got me into the sport like most of his fans. We hope to see the old Connor, the Connor who became double champ. I just don't know if he's that guy anymore. Unfortunately, I think it's a combination of Connor not being that hungry fighter he used to be. He's filthy rich now, as well as his peers just catching up to him. Dustin is a completely different fighter than the guy Connor knocked out in 2014. Watch any of Dustin's recent fights, with the exception of his Habib fight, and he's just a killer. He's so incredibly talented and well-rounded.
So does Connor not really have a chance?
Anything can happen in MMA. That's what we all love. A fighter can be completely dominating all rounds of the fight and then get knocked out with seconds left in the last round. It is truly a crazy sport. So yes, Connor can absolutely still win this fight. He is still very talented and competent. He got in some great shots on Dustin the first round in their last fight. I think leg checks are going to be key. And Connor has made it very clear he's been working on that. Dustin's leg kicks were detrimental to Connor in his last fight. If he can check those legs, we could very well see a different outcome. But of course, Dustin will be anticipating this. It's going to be a great fight. I think Dustin is the overall better fighter, but anything can happen. And I definitely don't see this fight going the full 5 rounds.
So if they fought 100 times, how many times do you think Connor would win?
Right now, I would say 30.
So that's where the mispricing is. We think it should be more like 30-70 rather than 50-50.
Well, fantastic. I think that's a first, not only for this show on its debut day, but for this channel in general, to have 2 blue raspberries interviewing each other. But nonetheless, it very insightful and specific, actionable recommendation there, with McGregor possibly significantly overvalued, not only on Polymarket, but in Las Vegas, if you buy into this analysis. So thank you for that. And we want to get to one more kind of very much in focus market here. This has to do with COVID vaccination and vaccination target for, I believe it's mid-July, 7/15. And this is one where some data has just been emerging in the last couple of hours today as well. So Chris, bring us up to speed on this one and how you're viewing these odds.
Yeah, so there's a new data drop about 1 hour ago. So people are kind of all over that right now. So there's a big change. It went from, I believe, 82 cents to 93 cents, the 10 cent swing. I've been modeling this market on a spreadsheet. And so before the data dropped, I thought it was great value at at 20 cents, I was short, and I'm still short. I actually doubled down after the market came out. So when the threshold is, will 183 million people get vaccinated before July 15th? And when I modeled it with my time series, I hit 182.6 million. So in just from a purely time series perspective, it's roughly a 50-50 chance, or I would put it at a roughly 50-50 chance at over or under that threshold. So the fact that it was trading at 80 something cents before this data came out today, I already thought it was mispriced, but now I think it's even more aggressively mispriced. Because in model, a bad day for me would have been if 300,000 people were vaccinated, new people were vaccinated today. But the data that came out was 354,000 people were vaccinated today, which is not great. It definitely, there's less of a road to being under that threshold. But the thing about it is, I believe the market overreacted, frankly. It dropped by 10 or 12 cents, something like that. And I think it should have been dropped by half of that. First of all, it's always higher on a Monday. Vaccination, just because like that's how different states report. It's not a big deal that there was a big data drop today, because tomorrow could just as easily overcompensate for it. But also more generally, this market's somewhat of a referendum on the Delta variant, right? People believe that because the Delta variant is flaring up, there's all these stories about the Delta variant, that people are going to be afraid and be vaccinated more because they are afraid of the Delta variant. And I just frankly don't see that happening for two reasons. First of all, I think people who are afraid of Delta, or who would be afraid of Delta, or who are following the news closely, they're already pretty much all vaccinated. I don't think the holdouts, the people who haven't been vaccinated, care about Delta very much. I don't think that's going to raise the curve over 183 in a big way. Also, July 4th is next week, and nobody knows what's going to happen with July 4th. My thesis is that people are going to go to their cottage, they're going to go to the lake, they're going to party, they're not going to get vaccinated. I think there's going to be a lull next week, and I don't think enough people are taking that seriously.
So that's really interesting. And a couple of the points there you make are, I think admittedly speculative. You're sort of saying we don't know what's going to happen July 4th, and that's very fair. But it's relevant here, especially because the market seems like it's saying it does know what's going to happen. It knows it's going to be above 183 million, not with total certainty, but it's actually now at 95 cents. So what you're saying is there are enough curveballs here that you can't overread so much into the one day's data on a Monday when it tends to be high enough. It tends to be higher than usual, and going into a long holiday weekend where we don't really have enough historical data to know how it's going to look. And so therefore, even if this is no longer fairly valued at 50-50 where you did have it, even if now it should be 60-40, even 70-30, if you can get on the no side for 5 cents, as you said, that would be even more aggressively overpriced, underpriced than it was when you could get in at 20 and you were saying it had a fair value at 50. This now effectively becomes near lottery pricing at just 5, 6, or even 7 cents.
Yeah, I really think it's a great lottery ticket. Like the market probably is not wildly wrong, just because the people who trade in this market have traded in seed markets for however many months and following it intensely. And like these are like the real vaccine market nerds that are in this market.
Although interestingly, this one also has a fairly low.
Crazy off,
yeah, sorry, Chris, we got a delay. You go ahead.
Oh, well, all I was going to say is at 5 cents or whatever it's trading now, 6 cents, I think it's an unbelievable lottery ticket.
Yeah, that does seem to be fairly compelling when the market gets this certain about something that seems to still have a lot of uncertainty around it. Although, as you said, the folks trading in this may be doing a sufficient amount of homework that it's always tough to second guess the market when it really gets certain about something, and yet that can sometimes be when you find the the best deals. But one other point I wanted to note on this one is something you mentioned about one of the other markets is just the fairly low liquidity number. So this might be part of the explanation as to why the price spiked so hard in response to the new data drop today. And again, I wanted to use this as an opportunity to talk a bit about the difference between the way some of these different markets work, those that work off of an automated market maker with a liquidity pool, the way that Polymarket does, versus what traders in either traditional financial markets or other prediction markets may be more familiar with, which is the dual auction order book, which you can kind of look and see where all the bids and asks are on a given contract to get a sense of how stable the pricing would be. And as you were describing earlier, if you have a market with relatively low liquidity, it may not draw the sharper, more serious, bigger bankrolled players because that lower liquidity number effectively equates to a thinner, shallower order book. In other words, you can't get in there, even if you're certain about something or relatively certain, you think something's worth 90 cents and it's trading at 50 cents. If it's very illiquid, if there's not a big liquidity pool there backstopping that price, you're going to try and plow in and you're going to almost immediately push that price up to what you think the fair value is. Versus if you just see an ocean of liquidity, it means not only does the market think something's worth 50, but the market's going to be very resilient to a trader who comes in and is buying directionally, one direction or another, short or long, that price. So I don't know if that's having an impact, if that's translating to an outsized move in the price of this market within the last hour since that data came out. But that number there of $8,000 in liquidity could have something to do with it. If that is the case, might we expect to then see this pop from 80 to mid 90s kind of drift back down, absent any other data over the course of the day?
So what I would look at is there's new data every single day. And if I were following this market, which I am, I would be online tomorrow at 1 p.m. to see what the data looks like. I forget what the question was, but that's how I would play this market if I were.
No, that's very good advice. And so people think about getting into this market or that who are already in this market should keep an eye on that 1 o'clock daily data drop. My question was just about whether illiquidity may be exacerbating what you may be arguing is sort of an irrationally large spike in the price following today's data.
Yeah. Okay. Actually, that's a good point because in the last vaccine markets, that's when people were really making like tens of thousands, hundreds of thousands of dollars, and those same people are still in this market. But because it's so low, the liquidity in this market is so low, they're kind of just like they're in it for shits and giggles. Right. It's not like they're not taking it as seriously as they were in the last vaccine market. One last thing about this market I would say is. I actually did not know this until today, but this is so the data is released every day at about 1 p.m. on the CDC website. But there's one guy on Twitter. He front runs the CDC by about half an hour, a White House official, and so this is the guy that they all refresh constantly. His name is Cyrus Shapar. Cyrus Shapar. And that's who you should be refreshing every day at 1 p.m. or noon.
Yeah, thank you for that. We've got that up on screen there. You can see his
that is really
Cyrus
Shapar,
SHAHPAR 46. So definitely give him a follow and probably turn on those notifications so that you'll get alerted. As you said, this was about a half an hour. This was 39 minutes today ahead of the official data drop. So obviously that's an eternity in the life of the market. So you want to be making sure that you're getting that data as soon as it comes out each day. Well, Chris, I want to thank you for this extremely wide-ranging tour of some of the hottest markets on Polymarket. And before we let folks go, again, we teased at the top that we have a very cool segment here to cap off the episode. It's one of the great perks of catching this show live. It's that you, the viewer at home, get to vote right now on an upcoming new market launch on Polymarket. It is time for Viewer's Choice. Hey, we're back. I got disconnected there for a second. Not sure exactly when I got cut off, but I have just launched this poll. This is the official way to vote on this upcoming new Polymarket launch. And it is going to be one of the following four, possibly multiple, but these are the four that are currently being mulled over by the Polymarket new question team. It is a weekly jobless claims market. This is one that you may have seen in prior months. I think they did one back in April, if not others. This is tied to the weekly initial jobless claims released by the Bureau of Labor Statistics. Second is, will Alexei Navalny, the Russian opposition leader and survivor of presumed state poisoning, be convicted on any fraud charges related to his activities with nonprofit organizations. He runs an anti-corruption foundation for which he is under indictment for a variety of presumably politically trumped up charges. And this is tied to whether he is convicted on one or more of those charges. Third option here is whether an executive order will be signed or federal legislation become law that would forgive $10,000 or more of federal student loan debts for student loan borrowers. Those of you who have been following this political fight know that this is one of the Biden team and really all of the, most of, if not all of the leading Democratic presidential contenders' agenda items in terms of student loan forgiveness. Some made it more of a centerpiece of their agendas than others. Biden did, by executive order, pause student loan obligations until I think it was October of this year, September or October, and had early on made noises about including it in his budget request. That seems to have come off the table in terms of congressional action. So now the speculation is whether Biden will simply forgive it with a stroke of the pen via executive order. So whether he can and in fact will do so. And the fourth here is whether a SpaceX Starship will reach orbit by August 15th of this year. Just yesterday, the company said that it is shooting for July for that milestone. So this would, if they remain on their apparent trajectory as of 24 hours ago, be tied to that presumptive launch, if successful. That being said, there are still some regulatory approvals that the company is waiting to come in. So if you're looking to speculate on this outcome, that would certainly be part of the calculus. It would not only be the technological, but the regulatory framework and context here. So these are your four choices. Please go ahead and vote. As I said, this is going to be up for just an hour from when I clicked tweet a few minutes ago. Again, this is exclusively available to those of you watching the show, although I suppose anyone stumbling on our Twitter account would find this as well, but they wouldn't have all of the lovely context that I just gave you, nor would they have the heads up that it was launched. So we appreciate you tuning in. We hope that you will vote, and the folks at Polymarket are going to be watching the results of this. I see, the view you're getting on screen, or that you were getting a moment ago, is from an unlogged in, so unvoting perspective. So you're not seeing the results, but I'm seeing that many of you are clicking away with your votes here. And it's interesting to see what these early returns are. So get in there. You've got till about 3:45 p.m. Eastern time to get your vote in. We'll have the results of that in the next installment. I want to thank everyone for joining. Again, I apologize that we had a couple of technical glitches. I promise we'll get them ironed out by the next episode, which will be a bit later this week. We don't have the exact time and day set yet. We're aiming for doing 2 to 3 of these live broadcasts, these kind of 30 to 60 minute live interactive broadcasts on Polymarket Insiders each week. But we might be trying out a couple different time slots and different days and sort of seeing which resonates best, which meshes best with viewers' calendars. Again, we'll make all these episodes available indefinitely in the archive on the channel, both at youtube.com/oldbulltv and at oldbull.tv. But obviously you get a lot more out of it if you're interacting live. We've got a fairly robust active comments section here on YouTube. We've been keeping an eye on that as well. And if you have questions for us in a future episode, feel free to just ping the panel right during the broadcast, and we'll see if we can answer as many of your questions live as possible, but also for our trivia questions to win those fabulous prizes and to vote on these additional upcoming Polymarket launches. You do need to be here with us live. So we thank all of you who were able to join us. We hope you're able to join us next time. Thanks so much for joining. Happy trading. See you next time.